Hello, my name is Joe Hopkins with Hopkins CPA firm. We do work all over the United States and all 50 states. Just wanted to talk to you a little bit more detail today about the Schedule C large expenses that some people try to claim on their tax returns. What you got to understand is number one, the Schedule C is the most heavily used tax return out there for a lot of sole proprietor businesses. And unfortunately, a lot of these small businesses unscrupulously try to take advantage of the IRS, so they clamp down on this with a higher audit rate across the board. The IRS also has access to each SIC code. That's the code for each type of industry across the board. They use these expenses. They can average these expenses for each one of the categories, such as marketing, supplies, other payroll expenses, you name it, that falls into each one of these categories. And they average each one for each different industry across the board. And if you are, like double or triple or quadruple the normal rate for, say, marketing in a landscaping business industry, well, that kind of raises a red flag for an audit along the way. So kind of raising that red flag to say, hey, come and audit me because I spent $10,000 on advertising and I'm only bringing in $13,000 in business revenue. So that's a big red flag, especially when you're drawing these profits down to below zero and you're showing a loss maybe year after year. You're also subject to what they call hobby loss income. So every business is in it to make a profit, right? Well, if 3 out of 5 years you're not making a profit, they can regulate you back to being this is a hobby instead of a true business. So don't, if you have legitimate expenses, just claim the legitimate expenses. Don't raise the red flags and continue doing business as normal. If you have receipts for all of these red flag items, go for it. Claim your expenses. Don't be afraid. If you've got legitimate expenses and receipts across the board, even if it's 5 times the normal expense amount, don't be afraid. Rock and roll. Let's do it. I'll help you out. I'll even give you some free advice. But in the meantime, just beware that a lot of people take advantage of the system and they just want to weed you out and make sure you're not trying to take advantage of the IRS along the way. So my advice is stay below the radar. You've got receipts, substantiate it, back it up. You don't necessarily need the receipts right off the bat, but it's good to store them away because, maybe 18 months, 2 years down the road that they come knocking on your door and they say, hey, let's take a look at these meals and entertainment expenses or marketing expenses or travel and entertainment expenses. So with that being said, give us a call at Hopkins CPA firm, 361-360-3855. Again, it's 361-360-3855. Thank you much. You have a good day.